News with Ben LeBrun over at Options Express. Finally, at 45 a.m, we'll be speaking with James Ordis over at Shaw and Partners for some of his opening calls. Firstly, though, let's go straight to the boards, check in and see how Wall Street closed there. Another solid session there. US markets, along with sort of markets around the world, seem to be predicting a victory for the Remain camp. We saw the Dow Jones rising 230 points there, the S&P and NASDAQ also solid rise. All of those indices up more than 1%. The S&P holding above that key psychological mark there, closing at 2113. We saw the banks leading the way because, as we know, they are sensitive to the outcome of the EU referendum. This looks like we're in for a pretty solid session locally. SPI futures up 60 points there, jump of 1.1%. Off the back of these leads, obviously, this risk-on sentiment continuing. Although, as we know, things can change very quickly. Let's bring in our guest host who joins me in studio today, Mark Bayley from FIIG Securities. Mark, good morning. Really appreciate you joining us. Might just get your thoughts because, gosh, the markets really are pricing in this Remain vote getting ahead. What happens or changes? I mean, it's going to throw everything into chaos if we all of a sudden see Leave getting up. Yeah, absolutely. I mean, the market is kind of 90% pricing in the Remain vote getting up, so no change, and the UK stays inside the EU. Now, if that doesn't happen, when we get the results later this morning, probably the first one's coming through 9:30, some big ones there. And if they start to point towards a more exit outcome, then in terms of how the markets have been for that, then absolutely you're going to see a huge turnaround in both in risk assets and currencies, because at the moment they're just off to the races. Safe haven, flows are coming out from there and into the risk assets, into equities, back into cable. You're seeing a decent strength in the Aussie as well this morning. As that probably that yield play and that carry trade starts to re-emerge. We'll obviously be really closely watching a number of those sort of results as they flow through. A lot of talk about private polls coming through because obviously there's no exit polls. How much can we rely on that? Because it was interesting. One of our earlier guests was saying, well, given they are private polls, there was maybe could see discrepancy in those numbers. Again, that could sort of throw things into a bit of uncertainty. What do you? I mean, should we be watching those private polls? Yeah, well, I mean, probably the best indication that we've got. There's also, conspiracy theories that maybe those exit polls would, favour some of the positions that some of those hedge funds and those private companies have put on in the first place. Interestingly, with the exit polls, we don't have any exit polls because we have nothing really to compare it to. So we can't really say, there's been a swing, 4 or 5%, because the last time we voted on something to do with Europe was back in 1975 when we joined the EU. So there's nothing in comparison there in terms of what it's like now. But there has been some studies that have tried to map that, and in terms of some of the kind of early results, we'll get a good idea in terms of how that pendulum has swung, in terms of the weather and the outcome there. If it's a higher turnout, I think we'll get some actual voter turnout results coming through as well. And if that is high, then that would probably indicate that Remain is more likely in terms of the fact that the more vocal and more kind of incentivised to vote has been those Remain camp. So if the turnout is high, it means that the Remain camp has managed to get their vote polls. Equally, the weather, there has been some flooding in the south of England that you've seen, and typically that means that the older voters don't generally get out in the weather, and typically the older voters are more conservative. But actually in this vote, they're actually wanting to leave, which is actually quite unusual. They kind of want to go back to the good old times of the 1960s, 1970s, when kind of the UK was standing alone. So that's all to play in the mix. But at the moment, you're seeing some kind of initial polls saying, kind of 54% in favour of stay and 46% in favour of leave. And I think that's the market has priced that in, as you say. If that doesn't happen and we get some results to indicate that early doors, then I think you'll see some fairly vicious swings in the markets. Okay, and the pound in particular, we'll be watching that really closely. Let's bring in Evan Lucas, who joins us now from IG in Melbourne. Evan, good morning. Great to see you there. The latest poll that's come through, this Ipsos Mori poll, it's putting Remain at 54%. So I guess this is really what we've got to go on at the moment. We've seen sterling continuing to soar right through 150, I believe. So no doubt we're going to see these sort of wild swings throughout the day.
Yeah, and good morning to both of you and Mark. I think what you've also got to probably put into perspective is clearly the strength that the market is buying in. Mark's already alluded to the fact that the risk on trade is clearly there. Looking at the Aussie, if you do want to bring it back to us, we are now actually touching and slightly shifting above the Aussie-US pair when the May rate cut came in, and that's an amazing thing to also point out too, is that clearly all of the sort of the risk momentum is back to the onside. If you have a look since that terrible event with obviously the killing of that AMP last week, the pound has actually moved up almost 10%, and it clearly shows you that the Remain campaign has really jumped into it. I think there's been a few this morning that may sort of point to that. Sunderland just came out around about 5 minutes ago and showed possibly a 60-40 split to a leave, but that was probably already expected. And the fact that the other thing that's happened is Nigel Farage, obviously the head of UKIP, obviously probably the most prominent campaigner for the Brexit, has already somewhat conceded. He's apparently contracted his statement, but he did say that he already saw the fact that the UK have voted in. So looking at that, and if you look at what's happening already with pretty much, you know, those sort of out-of-hours markets, they are moving up even further, and the risk on trade is clearly there. You've already alluded to the pound. The one I'm watching is actually what's going on inside the yen. The yen's being shed absolutely left, right and centre, and that will obviously probably explain why at the moment the Nikkei looks like opening up almost 3% on the open this morning on the back of the fact that the Japanese yen is being shed by everything, and it's almost down 3% and a bit against the Aussie. It's down around about the same, a little bit more against the Kiwi, and it's almost 3.6% against the pound. So it shows you very clearly that risk on is there. There is obviously a big move to the idea that Remain. Mark also pointed on the fact that it's 90%. If you look at the betting agencies, it's moved it up to 92% chance now. Obviously, the Remain campaign being the winning vote, and that clearly is just increasing ever so further with more and more votes we get out.
I saw you nodding your head there, Mark, in agreement with Evan around the yen there. I guess this flow into risk assets, it's a reflection of that flow out of those safe haven assets like the yen.
That's right, and I think you're going to see a continuation, and it's now because the result is as expected. The hard part in figuring out where the markets go is how much has been priced in previously. You know, I've seen some comments that the reaction that we've seen in assets, both in equities and to a lesser extent in currency, was kind of almost today's action yesterday on the expectation that the result was going to be a Remain. So maybe throw it back to Evan in terms of, you know, where do you see, you know, the currency markets going from here, because we've had a fairly significant rally in a lot of currencies so far.
Yeah, good point, Mark. And I think that needs to be really clear in terms of what's going on, is that reaction has been a 24-hour to sort of 36-hour, and they're really on the back of not the polls that are coming out right this second. It's more the fact those final three major polls, the Comres, the Ipsos, and also the YouGov polls from last night, all finally conjointly showed that probably the Remain camp was about 2 to maybe as much as 5 points ahead in that poll, and it's really moved from there. Obviously, we saw actual physical trading in the cash markets in Europe and the US backing that idea, and I agree completely. If you look now at the pound, so look at cable, it hasn't actually moved a huge amount since the polls opened at 4 p.m. yesterday for us here in Australia through to the close at 7 a.m. this morning. It only moved up around about 70 pips. That compares with, you know, the 4 or 5 days before where it's moving up physical cents. That's a big change. So I agree. It's obviously sort of moderated because it's already priced in, and I think that needs to be part of your thinking. So the volatility will come in the next sort of 3 or 4 hours, where if we do get some of the smaller councils declaring for a leave, and as I said at the start, Sunderland is one that they'd all sort of pointed to as being one that could leave. Glamorgan's another one. They've also pointed to Woking as another one to watch. They're the ones that are close, and they're the ones to come out probably between 9 a.m. and 12 p.m. today for us here in Australia, that may push a bit of volatility. But in the main, you're going to see, and excuse the pun, you're going to see most of the results that actually matter come in around about 12:30 through to 1:30. They are the ones that will actually end up basically making the majority of the vote, and they are clearly at the moment pointing to the idea that they're about 54 to 52% in that sort of range of Remain, and that's why it'll be very interesting in the first 3 hours, but it will calm down this afternoon as more and more of those bigger polls show that probably Britain has voted to remain in the EU.
We're just going to pull up a chart now, actually, Evan. This is really sort of highlighting the uncertainty that is being created by all of this volatility. We can see, you know, both the pound and stocks dived and then sort of rebounded significantly in the lead up to the vote. The pound, we've just got it up now, actually. The pound is in the white line there. You can see the FTSE is in the blue. So, I mean, we talk about moves in the currency. What about the stock markets? What can we expect for the FTSE? And no doubt the DAX and the CAC are also going to be pretty vital given their sort of contagion effect, the flow-on effect through the rest of Europe.
Yeah, it's the same sort of probably call as what I made with obviously the currency with around the pound. And the thing is, the pound is always a leading indicator of what happens in the underlying equity market. And if you have a look, if you really go back to last Tuesday when the Leave campaign probably hit its absolute peak with regards to, you know, the momentum behind it, the polls suggesting that actually it was a possibility. You'd had some articles, particularly one by Ambrose Evans-Pritchard, all of that came into it. You saw that really big shift down. The FTSE lost around about 2% in that day, and then lost another 1.6% the preceding 2 days, and since then it's been shifting back. And you can see last night, even with the fact that Britain was at the polls and it was a flattish night, you can see that it's actually gone back over that 2-week period to pretty much where it was before the sort of the Leave campaign really ramped up. And I think tonight will be very interesting for when they actually come back with the vote obviously counted, the result declared, and the most likely result being Remain, that you'll get another wave on it. The fact that the US has really bought in on the idea that it's going to obviously remain the status quo, the fact you saw the Dow move up over 200 points shows you that most of this is now priced in. And I think all the excitement probably, unfortunately, has already happened, and therefore today will be quite a fairly low-key day in terms of what will happen. There will be volatility, no doubt about it, but I personally believe, and you can see it already in the markets, most of this is priced in. The one thing that we've been watching is the volatility index inside the pound, and that's the one that we've been pointing to. Is it hit over 45 on Tuesday last week. It was the highest level since December 2008, and it's come all the way back to that level and some more in the last 2 days, and that gets back to those exit polls yesterday suggesting status quo was there. So it's all probably already priced in, and the equity market has been basically following what's happened with the pound and sort of corrected itself after that big initial shock.
Yeah. Evan, it's Mark Bayley again. In terms of the volatility that we have seen and the moves that we've seen, has that been on large volume in terms of your client base? Because there's been some talk that it's actually been on low volume because people are sitting on the sidelines until the result is known. What are you seeing from your client base?
Yeah, that. And I think that needs to be also very clearly is a lot of people have actually put a lot of money on the sidelines. So that may also be the second part and second answer to Leanne's question, is that if you do start to see that wave and that move up in the FTSE, it's that people will reinstate their positions as we sort of move away from back to the status quo, probably pre-May, where things were moving relatively nicely in the European markets as a whole. So there is volume out there. If you have a look also at cable, the movements in cable have been very clearly on the idea that volume is much lower than normal, and you can point to not last Tuesday but the Tuesday before, where there was a fat finger trade in Asia, and that really did show that the volatility was up, yes, but volume was clearly down. To see a movement like we did, it moved from around about 142 to 146 very, very quickly, shows that volume mark is clearly has been a bit of an issue and probably making that volatility higher than it normally is. So I completely agree. You'll probably start to see normal volumes also returning as the fund managers get away from this risk event, have obviously put money on the sidelines and reinstate medium-term views back into their positions, and therefore start reinstating themselves into the equity and also the currency markets.
All right, fantastic. Quick final note before we leave you, Evan. Obviously expecting pretty solid gains there. Where in particular, what sort of sector do you think are going to be in keen focus today?
Yeah, look, I think it's going to be broad brush because this is a whole risk event, and the ASX is that, let's be honest. You can point to the banks, and Mark's very much right on the idea that the yield trade will probably be one part we benefit from. The fact that you've seen the 10-year drop below 2% is clearly that trade, and the Aussie at the current level suggests people are moving in there. Not only that, just watch things that are exposed to the UK. So watch something like Macquarie, watch something also like CSL. They may be giving you a little bit more of a gauge as well. Not a huge one, because we don't have a huge amount of trade in that part of the world, but I think it's already priced in. Banks and everything as a whole will get a wave today. There is no one specific sector to really clearly watch, and we are looking at moving up as much as 1%, maybe 1.2, which is a really good way to finish the end of the week, heading into what will be an interesting week for us, the election next week and end of financial year. Yeah,
absolutely. All right, really appreciate that, Evan. Do hope you have a great day ahead. An exciting one, no doubt.
Thanks, Leanne.
Evan Lucas joining us there live from FIIG in Melbourne. We're going to take a quick break on that note. When we return, the pound is soaring on Remain confidence. We'll have more analysis from Luke Bartholomew's of Apex Australia next.
I knew real life insurance was right for me after the first call. They gave me confidence. So if something happens to me, I know my family's financial future is protected.
You can apply for Real Family Life cover quickly and easily over the phone without a medical or blood test.
Good afternoon. Real Insurance